You are watching Market Watch, the brief overview of the key events from the world of finance. Rate cuts in Switzerland, Canada, and the Eurozone have led to a stronger US dollar, which rose 1% against the euro, 1.6% against the Swiss franc, and 1.8% against the Japanese yen. The dollar also gained support from increased Treasury bond yields, following a reassessment of expectations for Federal Reserve policy. While the market anticipates a rate cut next week, the likelihood of further cuts in January is only 20%. The situation remains uncertain amid the return of Donald Trump and potential new political initiatives from his administration. A strong dollar is putting pressure on emerging market currencies, limiting their ability to reduce interest rates. The Indonesian rupiah hit a 4-month low, forcing the central bank to intervene. The Reserve Bank of India is likely supporting the rupee, which is close to historic lows. The Japanese yen remains under pressure due to expectations that the Bank of Japan will not raise rates next week. Small business struggles with wage payments are another factor causing the regulator to adopt a cautious approach to tightening policy. U.S. long-term Treasury bond yields have surged sharply. 10-year yields rose by 17 bps, and 30-year yields increased by 22 bps, marking the largest increase in a year. This is linked to a reassessment of the terminal rates, which are expected to decrease to 3.8% by 2025. Meanwhile, Asian stock markets fell, with the Chinese index leading the losses. Despite expectations for support measures from Chinese authorities, specific initiatives have yet to be introduced. According to BlackRock's report, a reasonable allocation for investors considering Bitcoin is 1 to 2% of their portfolio, which is similar to the risk associated with investments in major tech companies like Amazon and Nvidia. BlackRock emphasizes that BTC can be useful for diversification and as a hedge against specific risks, much like gold. The popularity of spot BTC ETFs, including the iShares Bitcoin Trust with $54 billion in assets, is driving institutional demand, which could lead to demand shocks and price increases in 2025. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.